You tune into markets at noon, and now we are joined by Param Subramanian, who's the Vice President of Equity Research, Banks and Financials, Nomura India, who's joining us. Hi, Param. Thank you so much for taking the time out and joining us today. Param, tell us right off the bat, according to you, what has really changed for banks since the last quarter results? Now, can we expect growth to remain muted this quarter as well? Because the pre-quarter updates that have come in, that did not show any positive signs of growth, and the system-wide growth is also slowing down.
Yeah, good afternoon. Thanks for having me on the show, and good afternoon to all your viewers. See, you're absolutely right. There is a moderation in growth, be it loans and deposits across the board, across all the banks. And deposit growth, especially among all the banks that have reported their pre-quarter updates, has been especially soft. And you can understand that a lot of this, of course, is being driven by the very tight liquidity that we are running. That has been driven by this significant FI outflows and obviously the decline in the RBI forex reserves that we all know about, that has played a very sharp impact on the deposits as well as on the CASA across the banks. And now this is something I think will be something that will play out across all the results this quarter, and it will also show up in a margin impact across all the banks, because if CASA ratio is going to see pressure, which we've seen in all the pre-quarter updates, and that is the low cost deposit, then that has to show up in a margin pressure across the banks as well. So muted growth trends, muted margin trends as well, and at the same time asset quality, which I think we started seeing pressures over there from about last quarter. I think we will see more of that going into this quarter, especially among some of the mid-sized banks that have exposure to riskier segments like microfinance, like credit cards, which they've grown very aggressively. And I think that is something that will play a part. So muted trends across the board, and I think one has to be focused towards the top banks, in such a scenario.
Well, certainly, Param. Hi, good afternoon. This is Shrishti also joining in. Like you rightly mentioned, that CASA is not boding well for all these financials. Even look at the numbers from the major HDFC Bank as well. There too, we have seen a bit of a pressure coming in. But Param, from here on, because this has been the trend for the past few quarters now, going ahead, do you believe that the CASA should show an improvement from these levels? And how is the system liquidity supporting to these numbers?
Yeah, so that's a bit of a tough one, because see, I think the CASA right now is a slave of where we are, from a liquidity perspective. And if you see the significant FI outflows, and I think that is the difference in this quarter, that is basically float money from Indian bank deposits moving abroad, and that has to have a consequent negative impact on the CASA deposits, which is what we've seen across the board. Now, unless the liquidity scenario really improves, and it can play out in various scenarios. Say RBI does something artificial to infuse liquidity into the system, or we see some of the forex reserves building up because the FI inflows come back. I think there is definitely a continued pressure over here. And rightly, like you pointed out, there is a moderation that you will continue seeing going ahead. But this quarter, it has been sort of exacerbated because of the FI outflow. So the outlook remains muted unless you're looking at a sort of an easing cycle play out in terms of RBI coming in to infuse liquidity. We saw a measure towards that when RBI cut CRR in December, but we need to see more of that. Otherwise, deposit trends continue to be muted across the board.
Right, Param, you mentioned about the stress, the slowdown in the loan growth that is attributed to the rising stress in the MFI and unsecured loans. Now, while the companies remain optimistic, the market participants still believe that the peak of the MFI stress is yet to come. What's your take on that? And also looking at the MFI-focused banks like IndusInd Bank, Bandhan Bank, they have all showed slow credit growth as well. Valuation is also at multi-period low, almost at the 1x of price to book. Do you think that the risk reward can really turn favorable for these counters anytime soon?
No, you're absolutely right. I think we've only started seeing this MFI stress begin to play out across the banks. And I think we will see more of that going into third quarter as well as fourth quarter. Remember, a lot of the banks in their second quarter updates had called out that they see stress for at least another couple of quarters and hopefully a recovery beyond that. Now, at this point, I'm not so sure if that recovery plays out, because there are clear signs of over leverage across the system in MFI. And going by past cycles, I think this will take some time to clear out. So we are not in favor of these names like Bandhan Bank, IndusInd Bank, AU, specifically going into these quarter. We are neutral rated in all of these. I think there will be, of course, valuations have corrected for many of these names, but I think there is some more pain that these banks have to digest before we turn constructive on them. So we are more focused towards the top end of the banks. ICICI, SBI are the names that we like, which don't have as much exposure to these problematic segments. And within the mid caps, I think the name that we like is Federal Bank. And apart from that, we'll be relatively cautious.
We did note some of your top bets within the financial space at this point in time, but I would like to circle back to HDFC Bank numbers as well. Why I asked so, Param? Because I just wanted to make a point for our viewers that where is this stress actually and how are you seeing it? Because this time as well, the management has brought down that LDR below that 100% now, but this has also come at a cost of slower than expected credit growth. What's your take on this?
Yes, so I think HDFC Bank's issues are more idiosyncratic for HDFC Bank, where they have a very relatively high LDR. Prior to this quarter, it was north of 100%. And that is something that has happened to them quite naturally post the merger. And management has quite clearly called out that they are looking towards bringing this down in an accelerated fashion. Now, if the deposit growth at a system level is not supportive of this, because deposits are difficult to come by, naturally, the loan growth is soft, and we are seeing that soft trend continue to play out. I don't think the bank has asset quality issues as such to worry about. Of course, HDFC Bank has been the best underwriter in the whole Indian banking space, but I think a softer loan growth trajectory, especially in such a muted deposit growth environment outlook, is something to expect. And at the same time, if you're going to see weak CASA trends, not just for them, but for the rest of the system, I think the margin improvement story that has to play out for HDFC Bank may, gradually, get pushed out further. So that is why we are relatively neutral rated on HDFC Bank, but it is not related to any asset quality concerns per se. I think the bank will come back gradually, but it is just a matter of time.
Param, speaking of which, you had mentioned SBI. Do you think the PSU stocks like SBI, Bank of Baroda, they're better placed than the private banks? And because looking at the pre-quarter updates for Bank of Baroda, it is fairly strong. The MCLR rates for PSUs have also gone up, if I'm not wrong.
Yes, so they have taken MCLR rate hikes, and especially SBI, which has taken a higher MCLR rate hike. This is something that will translate to their margins, might not translate immediately, but it is something that will support them going into the next year if we are looking at potential rate cuts that can support their margins. But apart from that, I think the good thing that is working for the PSUs is that they are not as much exposed to some of these problematic segments as far as asset quality is concerned. So they are not as much exposed to segments like microfinance, credit cards. They do personal loans, but it is a very small proportion of their loan book. So that is something that will hold their asset quality in good stead. But the issue for the PSUs is that we are in the midst of, say, a cyclical slowdown from a macro perspective, and that will affect their growth outlooks as well. So even there, one has to be selective and more towards, say, the more quality franchises. So we are keen on both SBI and Bank of Baroda. The PSUs relatively on an asset quality perspective should be okay relative to the private banks. But I think the real upside for some of the, the longer tail PSUs to play out, I think we need a broader macro recovery to play out. And if that plays out towards the second half of next year, we will see upside in all of these stocks.
All right, Param, with this, we let you go on that, and it was great chatting with you, and you also helped us understand what's actually panning out within the financial space. Thank you so much for your time. But with this, Piers, it's one.
If you like this video, then like, share and subscribe to ET Now.